So, a very good evening to all our mentorship traders. A warm welcome to the new joinees to our community. 9 p.m. Friday evening, we are on the 27th of November 2020. The month comes close to an end. We had an expiry also, pretty muted expiry, I would say. So let's take a look at the index and the sectoral indices first. And then later on, we'll take a look at your questions, doubts, and trades that you have done over the week. So as always, we do a top-down approach with our Nifty, Bank Nifty, and sectoral analysis. This is the Nifty Future weekly chart. I'm using the Trading View platform. And as I have been mentioning for quite some time about this particular confluence of channels with which the index is dealing with at this juncture. The 13K target for the Nifty and the subsequent 30K target for the Bank Nifty has been well taken care of by both the indices. And we have also seen some bit of resistance and short-term profit taking. But nevertheless, what this particular chart suggests us is that Nifty on a weekly basis is at decent amount of confluence of resistances. Whether it will respect it or not, that needs to be seen. But we need to keep this in mind, especially this beautiful blue channel. This cannot get any better than this. Coming all the way down from the lows of 2008, this is a beautiful channel, and the index is at the upper border of this. Daily, we have almost a 14% rally in this move. And if you notice very clearly, especially if I turn it into a line chart, I think it will get a little bit more clearer. You would see price momentum divergences shaping up. You definitely notice this kind of a behavior. Over here, I'm using the relative strength index of 9 period. Please remember, divergences do not necessarily mean reversals. Divergences means that the underlying momentum is slowing down. This underlying momentum slowing down does not necessarily mean it has to correct. It can consolidate also. Add to this fact, you have a beautiful bearish engulfing pattern which we saw on Wednesday. Thursday, Friday essentially has gone within Wednesday's long-bodied range. So going forward, this Wednesday's long-bodied range high-low will act as important triggers. But as the index tries to bounce back, the momentum is still very much, or the divergence between the momentum and price is very much intact. Which means this is the technical jargons, the technical way of talking. But in a layman's language, which this means is, so let's understand this. It's not the best of time and price to buy equity aggressively. Yes, you can buy for the intraday or a couple of days, swing moves, breakouts is fine. But don't be overly bullish on equity or on Nifty at this juncture. A little lower price is healthier for the next leg up. Visually, if you want to understand this, you'll notice that from 23rd of March, was it 23rd of March? Yes, 23rd of March this year, the index has rallied significantly from the lows of 7,500 to now 13,000. And you'll notice that this entire move up has happened through ebb and flow of price. Price has to come down 5, 8, 10, 12, 13%, depending on the size of the correction, for it to make a new high. And so it's good for the equity or good for the Nifty to come down a little bit so that it can make a newer high. That's exactly what I mean. And these signs of price momentum divergences are such signs. They are not signals of reversals. They are signs of consolidations and possible reversals. So we see this clearly on the daily chart of Nifty. And this price momentum divergence is also coupled with a negative candlestick pattern. Now, this negative candlestick pattern is a sign of reversal. This is not a sign of consolidation. This is a sign of reversal. So, sign of reversal emerges within a sign of momentum slowdown. When you combine both of them, that I have a sign of reversal when the market's momentum is slowing down. This leads to a little bit more faith. This leads to a little bit of more of anticipation that yes, this market seems to be ready for a correction. We'll see this, but just remember that the trigger would primarily be Wednesday's low. Thursday's low was lower than that, so it's very important. It's very important to keep that in mind. If you closely look at the last 3 bars behavior, Wednesday was an outside bar, which does not create any directional bias. Thursday was a lower high and a lower low, which creates a bias on the downside. Now, today's price behavior was a higher high and a higher low, which creates a bias on the upside. So post an outside bar, we have a combination of 2 bars wherein the directional bias is quite volatile. And that's why I say it will be very important to see on Monday, Tuesday, and the levels that you should keep in mind is close to that 12,800 on the downside, and Wednesday's high of 13,137. Let's use 13,150 and 12,800. 12,800 and 13,150 are the levels that you should keep in mind for Nifty. But I would say we've been cautiously bullish for a couple of weeks now. I would go ahead and say even don't be cautiously bullish. It's okay if you sit quiet. It's okay if you stay on the sidelines for a week. Let's wait out a little bit and see how it behaves. 75-minute one time frame lower on the Nifty future, and you can clearly see that how well I think this is the box that we drew on the higher time frame. So on the visibility, I'll just remove the hours, and you will see how beautifully it is respecting this rising channel that we had drawn recently. I've kept it on the charts, and we can see how nicely it has respected the lower border as well as the upper border. A break of 12,800 means this one. If you find the Nifty down at 12,800, that will mean a break of the rising channel on the downside. This channel will be around how much? 835, 850, 1305, so around 170, 200 odd points. So a breakdown from, let's say, 12,880. So you're looking at around 680, 650 kind of a level, like these lows. That's the kind of anticipation that you might have if and only if the market turns bearish. 12,900, 12,800 will take you down to 12,600, 650. That's a short-term correction. That's the kind of bearishness that you can at least expect at this juncture. You can anticipate at this juncture. Whether it will lead to further, whether it will not come at all and the index goes to 13,200, that we'll get to see next week. But that's the kind of anticipation and preparation that you can have. That's Nifty. Bank Nifty, very similar. Now, Bank Nifty, if you recall, I've been mentioning this Fibonacci retracement levels of 76.4 and 78.6. They tend to work pretty good. Now, on a closing basis, if you keep a close watch, it's just broken above that couple of times and it's again consolidating. Is it also creating that kind of price momentum divergences that we saw on Nifty? Let's take a look. And you see the similar kind of behavior indeed here also. The prices have gone up, created some amount of divergence, and now the momentum is slowing down. The index has gone sideways. Pattern traders would probably be able to spot the kind of behavior like this on the charts. Now this is this taking a size, this taking the shape of a rising wedge after rising market, generally tends to be a sheer sharp signs of reversal. Add to the fact that you have a dark cloud cover. We can't call it a bearish engulfing, but we can call it a dark cloud cover. Very, very similar. Now you are in a phase of price momentum divergence, which means slowdown, and then you have a couple of technical reasons or signs of reversal. So very similar kind of behavior in Bank Nifty chart as well. And that's why when I look at both of them, that's why I say let's not be even cautiously bullish. Let's be very, very agile bullish for the day, intraday or one day, that's it. But let's not add up too much long positions. That's what I would suggest. Okay, these are the lines that we just drew. They get automatically drawn in multiple time frames. We'll just keep it on the daily, because on the 75-minute what we have is again a beautiful rising channel which we had drawn recently, and the index has been respecting the lower border really well. Will it be third time lucky? That needs to be seen. So if we talk about levels, then I would say 29,300. Below 29,000, 28,900. So let's say 29,000. 29,000, sub 29,000 would definitely lead to a bit of weakness for the Bank Nifty. This might clearly match with the weakness in Nifty, if at all that comes. This can completely be opposite. Both the indices can easily break away and go, continuously go up. It can happen. It does happen. But when we look at the charts, when we try to analyze the charts, would like to read the behavior of price, and this is what we can read. That both the Nifty and Bank Nifty is in a zone of price momentum divergence with some signs of reversal for sure. Whether the reversal will come or not, if comes, then we know what will happen, what we can anticipate. So when we club them both, we figure out that if the weakness in Nifty comes, if at all, I think Bank Nifty is the one which can weaken further. Now, without wasting much time, I'm going to quickly walk you through some aspects of the sectoral indices. I'm going to bring your attention to how a short-term divergence how come they act so strong. So let's take a look. I have sorted the indices basis of today's gain, wherein I can see that it is the small caps which had an exceptional run of over, I think, 3% up today. Yeah, it was 3% up. Big ascending triangle breakout, heading back to life highs. Strong. So small and mid caps. Do you notice this are the two biggest sectoral gainers today? Now let's take a look at the mid cap index. Okay, turn it into a line chart. You would also see the degree of divergences creeping in this chart as well. Again, this does not mean reversal. I'm going to repeat again, because time and again those who read books on technical analysis and the kind of examples that are shown primarily shows or furnishes that divergence means reversals, not necessarily. But what I'm trying to say with the help of is there in small cap? Let me quickly check. 88 and 86. Yes, indeed, it's there. You'll see that divergences have started to take shape. Sorry. Divergences have started to take shape in small caps and mid caps, and many other few sectoral indices also. Real estate, or if I turn it into line chart, it will be easier for you to see. This is the CNX Auto, and you can see that nice double topish kind of a prospect happening here on the line chart of CNX Auto. Media, on the other hand, is a clear breakout. So PVR and Z are the two stocks you can keep a close watch on. They generally track this index. Never excited me, but auto, very, very interesting indeed going forward. This interesting part comes again, if you can see, there's a sign of bearishness in terms of the of the bearish engulfing here, the divergence taking shape. PSU bank doesn't provide such a thing. Private sector banks creates a similar kind of a rising wedge in a rising market with a falling price momentum. So this is also a sectoral index, the private banks, which is showing signs of slowdown. So if Bank Nifty comes down, don't try and start to sell the PSU banks. Hit the private sector banks, I would say. Financials, the Bajaj Finserves, the M&M Finance, the Bajaj Finance kind of stocks, completely range bound up here with the drop of momentum. Now, generally, I have in my career have seen multiple times when this kind of consolidation just leads to a range bound movement, not much damage to the price, and then it continues further up. What this means is just consolidation. The RSI creates some room so that it can go further up. Highly possible. So all these that we see on the charts right now are signs of, number one, slowdown. Number two, where they are coupled with signs of reversals like negative candlestick patterns or negative patterns per se, like rising wedge in a rising market, etc. And if they turn down, then sub this week's low, if this week's low is breached for CNX financials, for CNX auto, small or mid caps, whatever we have seen so far, Bank Nifty and Nifty, that will trigger weakness, and that's certain. It's going to trigger weakness. Pharma doesn't seem like that at all. Pharma is within a big wide range, and it's trying its best to move out of this recent high, but it's got some resistances up here. So pharma will be a 1 day positive, 2nd day negative, 3rd day flat, 4th day positive, 5th day negative. That kind of a mode it has gone into. So can't bank in on pharma too much. FMCG needs to deal with these resistances. It too is creating divergences, price momentum divergence. It too has created a bearish engulfing up here. Metal, don't see any divergence here. Is it there? Let me just quickly check with 86 and 87. Yeah, there is a minor divergence, a 2-bar divergence here. Let me take a closer look at the weekly charts. Yes. So I was looking at these kind of range. It has taken it out. Now it's back to the highs of Jan 20. Needs to take care of June 19 and April 19. April, May, June 19, please. Exceptionally strong move. No signs of slowdown. Whether this divergence will work or not, I seriously doubt. But not as weak as the others, or not as weak anticipation as the others. So metals. IT breaks out from this symmetrical triangle and still holding well. There's no sign of weakness per se here. It's in a strong range. Energy. This is your Reliance. This is your OMCs. This is what they have to deal with. So can't expect much from them. There is no sign of such divergence in the energy index here. So let's sum it up quickly. It's not the best of time to go aggressively long. Lower price, yes. Nifty, Bank Nifty, small caps, mid caps, auto, private sector banks, and finance. I'll quickly repeat. Nifty, Bank Nifty. After Bank Nifty comes private banks. After private banks comes financials. Auto, small cap, mid cap. So if you want to stick to only the thematics, only the themes, then I would say auto, private sector banks. These are the two, which if they break this week's low can lead to weakness. This can lead to further weakness in the Bank Nifty, and Nifty maybe, provided if you get support from the IT pharma, then Nifty may not correct, but the private sector banks and the financials can. They had a good run, so they can correct a little bit. They have scope to correct. And so I would say strategically, don't go aggressively long. I would say don't even go cautiously long. Stay on the sidelines and wait for lower levels to buy. Derivatives contrarian traders can look out for shorting opportunities. All right, that's the call on the Nifty, Bank Nifty. I've taken a little bit of your time. Now let's quickly move on and talk about your trades, questions, and doubts that you have. So let's begin our Friday evening's discussion.